So maybe you've heard about real estate investing, but you're still not sure if it's a good idea. Well, in today's video, I'm going to show you 10 reasons why investing in real estate can be a good decision, remove that doubt, and get you guys going today. Hey, what's up guys? It's Andrew Ferguson here from The Economist, bringing you the best tips and strategies for investing in real estate, the stock market, all to create wealth in your own life. And in case this is the first time that you're checking in, I've spent the last 7 years learning how to invest in both real estate and stocks, and now I'm teaching others how to do the same. So if this sounds like your kind of jam, consider subscribing. But let's get right into the content for today's video and jump into our first reason why to invest in real estate. So let's talk about some cash flow. Now, cash flow is the first reason why you guys should think about investing in a property, and it's like the golden goose. If you find a property that you can actually cash flow, and that means just having the renter pay enough rent to cover all your monthly expenses, and there's a little bit left over for you at the end of the day, that is the golden ticket when it comes to real estate investing. You want to make sure there's cash flow, and when you can do this, it feels great. Let's dive into an example, and let's look at a property. Let's say you have a property, just one we're talking about here, and the cash coming in for rent every month is $1,500. Let's say after the mortgage, the property tax, the insurance on the property, and a little bit of maintenance every month, you have expenses totaling $1,250 a month. So we take 15, we subtract $1,250, and we're left over with $250 of cash flow each month. Now let's say you grow that portfolio out and you go from one property to 10. Now you got 10 properties that are cash flowing $250 a month, which is actually $2,500 a month when you times it by 10. So $2,500 out of your properties coming to you, and that totals $30,000 by the end of the year. $30,000 to do whatever you want with. You can put it back into the property, you can take it and go on vacation, you can take it and invest in stocks, you could take it and buy another property, you could take it and pay off some bills that you have lying around, whatever you want. Go crazy on Amazon, do some shopping, whatever. The point of the fact is that the cash flow generated from your rental can be used to fund other things in your life. That is the power of having a profitable property that cash flows every single month. The next reason you want to invest in real estate is because of the tax breaks and the tax advantages. When you go to file your taxes and you have a rental property, you're going to say to your accountant, hopefully you have one if you're not doing it yourself, but you're going to say to your accountant, I have all these expenses for the property, I did this much maintenance, I have this kind of insurance for it, I've got this much mortgage interest that I've paid the banks. Can you please take these and use these to lower my actual income level so I pay less tax? That's how it works. It's a great bonus, and as you scale up the properties, you scale up the number of expenses that you're going to have to pay, which means you actually lower your tax as you go through this process and gain more properties. So at tax time, it becomes very advantageous to have these expenses and be able to write them off. And in doing so, giving yourself some tax break and saving some cash for the long run. Now, reason number 3, we're talking about tax deferred growth. And what I mean when I say that, let's look at this example here, is as your property increases over time in value and the mortgage is paid down, you're not actually taxed on that money until you sell the property at the end of the road. So, for an example, let's look at purchase price of $180,000, and let's say over time it grows to $300,000 in value. That $120,000 difference, you're not paying any tax on that. It grows over time, over the years, tax-free, and when you eventually go and sell the property, you're still only paying tax on half of it. If you sell a property that's in your own name as a primary residence, you pay no tax in Canada. If you go and sell a rental property, you're going to have to be taxed on 50% of the value of the home. So in our example, $300,000 is the sale price. We purchased it for $180,000. That's a difference of $120,000. So cut that in half, and you're paying tax on $60,000, which means you walk away with $60,000 of profit, which is the other half of that profit, but you get that tax-free. So for my money, I'm taking $60K in profit tax-free, and I'm going to go do something else with that. But you're only paying tax on half. It's a great way to defer the taxes later on and only get taxed on half of the asset, which is a lot different than if you're going to go out and make $60,000 and work 40 hours a week to do that. You're not getting taxed the same way. You're getting taxed much easier on the profit made through real estate investing. And moving on to number 4, real estate acts as a hedge against inflation. And inflation is the concept of where the value of your currency declines over time, which is why $100 30 years ago doesn't get you the same amount it does today, because inflation takes and eats away maybe 2% a year roughly on average of that value. So as the dollars are valued less, a thing like real estate, a hard asset, real estate, gold, stocks, they hold their value over time and they don't get beat down by inflation, which is why it's good to have some real estate in your portfolio because it covers the inflationary period and it goes up in value. And speaking of going up in value, let's talk about appreciation, our next reason why you should invest in real estate. Also, if you guys are getting value out of this video, hit that like button for me and let's keep on trucking here. As you can see on the chart, the value of the average US home has gone up significantly over the past 60, 70 years. And that's not to say that all homes go up equally and in different areas will be affected differently, but generally the principle is that houses go up over time. They hold their value with inflation and they appreciate slowly over time. Are there drawbacks? Are there recessions where the housing market does tank? Yes, and you can see that from the chart as well. But the generality and the term is that houses hold their value and they appreciate slowly over time. With that being said, you should never buy a deal or buy a property based on the expectation of appreciation. I would recommend go on the basis of cash flow first. Appreciation is like an added bonus if it does happen while you own the property. But statistically speaking, properties go up over time if you have the property in your possession for long enough period of time. And so building off of that appreciation concept, there's this thing called equity, and that's reason number 6 today. So equity is the value that you get, and it's basically the ownership of the home that you have. When you buy a property and you put 20% down, the bank funds you 80%. So you own 20, the bank owns 80. Over time, as the mortgage is paid down by your renters or by your tenants, they pay off the mortgage for you. You get the ownership of the house as it creeps up 2% a year, perhaps, something like that. But over time, over 25 years, that mortgage gets paid down, the appreciation goes up, and the equity in your house gets built up as well because you owe less against the house. So again, over time, the mortgage gets paid down, the value of the equity that you own goes up, and every time that goes up, every mortgage payment that's made, you're building equity in that home. Little by little, step by step, until you get to the point where you don't need any more and you can retire happy on your own terms. So next up is diversification, and any good investment portfolio should have different assets in different classes. It's the old don't put your eggs in one basket narrative, and with real estate, you want to have it combined with some stocks, some hard assets like gold, silver, that kind of thing, and it works in tandem with these other things. Why is that? Because if you had all your assets in real estate back in 2008 in the US and the bubble burst and there was a crash, you probably would have been in a tough spot. You might have been wiped out and you would have had a tough time rebounding from that. Instead of having all your assets in one class, like stocks or real estate, spread it out, but make sure that real estate is a part of the asset class just so you can diversify fully and cover all your bases. Reason number 8, the use of leverage. In real estate, banks are willing to lend you 80% of an asset's value, being the home, and have you only pay 20% out of your own pocket. That is a highly leveraged scenario, and banks and lenders do this because they see real estate as a brick and mortar asset that holds up its value long term, which we already know, we covered that. So you can use leverage and expand your portfolio by putting down 20% instead of 100%, like in the stock market. If you want to buy some stock, you're going to have to put up 100% of that value, the cash value, to do so and acquire those shares. In real estate, you only have to put up 20% in a rental property, and you got the property and away you go. You start building equity. So you can use leverage to build quicker and gain more assets and grow your portfolio bigger in a shorter period of time. What that allows you to do is substantially increase your returns in a shortened period of time, letting you get ahead further financially faster. Which brings me to the question of the day. Have you guys ever thought about using a home equity line of credit, a line of credit, or a credit card to buy a property? Let me know in the comments below. I look forward to seeing those answers. Trucking along to number 9, you can add value to real estate. When you have a stock and you have a hard commodity like gold or silver, you can't really add any value. You can buy more of a company that you like if you have Apple shares, you can buy more Apple gear so the share price maybe go up, but it's not going to really affect it at all because there's so many people that use Apple and invest in that company. If you own a rental property, however, you can actually increase the value of the property by doing renovations, by adding an addition, by repaving the driveway, doing some landscaping. All the sweat equity you can put into the property and actually receive on the other end. So you can add value to it. If you can turn your single property into a duplex or a triplex, you've added even more equity into your real estate holding. Maybe you can take the property from a single family zone property, split it, and have someone else build a second unit on the next door. So you're actually diversifying the land into two different units. There's so many ways you can add equity to your property just by being creative and getting your hands dirty doing some work. Those kind of things don't exist in many other investment classes. So that's one huge advantage that real estate has over other investment platforms. And our last reason, my personal favorite, is that you can hand down real estate and create generational wealth throughout your family. You can buy properties when you're young, pay them off, get them done. 25 years later, you have them free and clear, their assets generating you income. And when you want to go and take the foot off the gas a little bit and ease off, maybe you want to give it to your kids early to help them out, to give them a place to live, or to give them some kind of cash flow in their life. You can transfer properties over to your kids and build generational wealth for your family that's going to last long after you're gone. But you've done all this work, so it doesn't just go to waste. You don't just sell it and that's it. You just give them the cash. You actually give them the assets that will keep producing income over time, keep going up with appreciation, and set your family up long term, which is a great thing to know and a great mission that most of us are trying to do. So I hope you guys enjoyed the video. Click the like button below if you guys got value. Again, consider subscribing to the channel. If you guys want to know and want to take the next step into finding the best real estate investing strategy for you, check out this video right here. I'll put a link in the description below as well. And until next time, guys, keep investing in yourselves.